For those that have long-term care insurance, and particularly those that bought long-term care insurance many years ago, you've likely received a notice that your premiums are increasing. We've seen some clients get notices that their premiums are rising 100% or more over the next few years. So this is not an immaterial change and could result in tens of thousands of dollars more in expenses for you over the course of your retirement. If you've received a notice like this, you're absolutely right to wonder if you should continue paying these premiums for your long-term care insurance. Here's a few things we consider with clients about whether or not their long-term care insurance policy is still right for them. First, it's worth considering how your financial picture has changed since you purchased the policy. If you bought this policy 20 years ago, you may now have seen your investment accounts grow and be in a much stronger position financially where you don't need this insurance. And if that's the case, then you can forgo this insurance. Next, you can consider reducing your coverage to limit these rate increases a little bit. Perhaps you're not ready to bear the full brunt of a long-term care expense on your own, but you could afford to pay a little out of pocket if you need to. If that's the case, you could look at either reducing your daily benefit or reducing the inflation of your benefits on these policies in order to have a cheaper annual premium. Finally, we just say that rates on long-term care insurance are going up because the costs and use of long-term care are also rising dramatically. These older long-term care insurance policies in particular offer really great coverages that will protect you from a lot of the expenses you might incur. So know that if you are worried about handling a long-term care scenario, this insurance is still very important to have. The tough thing about insurance is that the best course of action is different for everybody just based on their financial situation. It might make perfect sense for you to continue paying $5,000 a year for long-term care insurance and your neighbor to forego it completely just because of some differences in your finances. To really answer this question about whether or not it makes sense for you to continue paying for long-term care insurance, you need to take a detailed, holistic look at your financial plan. At Arnold & Moat Wealth Management, we're fee-only fiduciary advisors and help our clients with topics just like this every year.